According to today's data, real sales growth slowed in July in South Africa. With me down the line to discuss the SA economy moving forward is Senior Economist with Barclays Africa, Peter Wordington. Peter, there has been a lot of talk about ratings lately, with S&P having downgraded Brazil and just today Japan. Now, Moody's recently affirmed South Africa's credit ratings with a stable outlook, but stated rating could be downgraded if the commitment to fiscal consolidation and debt stabilisation falters. Considering today's data disappointment, will there be any ratings cuts for South Africa this year, and what could be the implications?
Sure. So Moody's last year downgraded us and put our outlook on stable. So we're not expecting that Moody's is going to implement another downgrade in a hurry. Having said that, I do think that Fitch credit rating agency may downgrade us in December when they come for their biannual review. Because unlike S&P and Moody's, they did not move last year. And unlike S&P and Moody's, they currently have South Africa on a negative outlook. But even if they do pull us down one notch, it still won't pull us down into sub-investment grade or junk territory where Brazil currently languishes. And I think that that's actually correct. If you look at our creditworthiness indicators, we're a lot stronger than Brazil on a number of metrics. I think it's quite misplaced to say that we're swiftly going to follow that country through the sub-investment grade barrier. Having said that, our credit ratings are probably on a slowly deteriorating trend, and it is absolutely key, as you pointed out in your question, that we demonstrate a stabilization of the public debt and narrowing of the budget deficit going forward. And there are some risks on that front. So I wouldn't say that we're out of the woods, but we're not following Brazil into the pit, at least not very quickly.
Tomorrow we have the inflation data due out. Some analysts say the SARB now needs to demonstrate greater monetary policy flexibility, focusing more on economic growth this year and next, and less rigidly on inflation outcomes. What is your outlook for the data, and what might be a more flexible move from the SARB look like?
To some extent, the SARB is caught in a very difficult position, however, because inflationary dynamics are accelerating, but as you pointed out, growth is weak. However, the weakness of growth in South Africa had absolutely nothing to do with the level of interest rates. It's more about the fall in commodity prices, our inability to reliably generate electricity, so we have widespread electricity shortages, which has undermined investor confidence. It's also about a fairly rigid labor markets. So there are all of those things which are keeping our growth constrained, and we can't affect them with monetary policy. Having said that, I don't think the SARB wants to rush into a very aggressive program of tightening purely because it doesn't want to add on the burdens of the economy. So they're trying a very difficult balancing act, and I think that they have been taking account of the weakness of growth when they set monetary policy going forward in the last, let's say, year and a bit, and going forward they'll continue to take account of the growth constraints. So we do not think that they're likely to hike next week, but we do have a hike penciled in for November. But it's very hard to call at the moment because the one thing which is going to drive their decision-making, I think, is going to be the behavior of the exchange rate, especially around the timing of Fed tightening.
South Africa's rand retreated from its firmest in 2 weeks on Wednesday. Had all things been equal, the rand may have fared better, but unfortunately the timing with the imminent US rate decision was not great. US, China and beyond headwinds considered, what key levels should we look out for?
What we've had over the past year has been a steady depreciation of the rand against the dollar, but that is really more a story about the strong dollar than the weak rand. But that's not the case very recently. In the middle of July, we've had the currency depreciate about 8% on a trade-weighted basis. And we had dollar rand surge up to touch 14 at one point, although then it subsequently retraced back. But I think what is really going to be important for the currency now is the outcome of tonight's FOMC meeting. Expectations about the pace of Fed tightening are very significantly implicated in the market movement, especially for riskier high beta currencies like the rand. We do not expect the Fed to tighten tonight, but if they signal that tightening is coming soon and they don't give the market some confidence that they will be very modest in their tightening objectives, we could see the rand come under further pressure. Where exactly it goes to, I think, depends very much on the specific tenor of the FOMC statement, and then also on what the SARB do the following week when they host their MPC and announce an interest rate decision on the 23rd.
Peter, some really valuable insight there. Thank you for your time. Well, viewers, that's all from me for the moment, but keep an eye on all of your favourite currency pairs by clicking back to Dukascopy TV. Goodbye for now.